Now let's begin with the market action and this late session drop for equities after Friday's sell-off. Joining us now is Invesco Chief Global Market Strategist Kristina Hooper and Henning & Walsh Asset Management President and CIO Kevin Mon. Guys, welcome. Thanks for being right here, keeping me company here on set on a Monday. Kristina, what happened, you think? You know, beginning early this morning, stocks were indicating higher. I don't know, was it tariff comments?
I think that had to play a role. Maybe if tariffs had been said in the French word, we would have been able to avoid that. But the reality is the last few days have really been characterized by nervousness and jitters. And we saw that on display with Walmart earnings last week. They handily beat expectations, but that outlook wasn't incredibly positive. It was sober and rational and said, hey, there's a lot of uncertainty. That was followed up by University of Michigan survey of consumers, which also rattled markets. We had inflation expectations going up and sentiment going down, the opposite of what we'd like to see.
Okay, so Kevin, given that rates are probably going to stay higher for longer anyway, and then we've got these indications that consumers sort of expect, you know, inflation to be there, which is kind of like the Stay Puft Marshmallow Man and Ghostbusters, right? Then it happens, right? Can stocks break out of this range, go higher, as so many seem to expect by the end of the year?
Yeah, I think we should expect more short-term bouts of volatility ahead. In 2024, the market moved lower by 1.5% or more, less than 4% of the time. That's incredibly low, and that shouldn't be expected to continue. But just because volatility has returned, and we're now over 2 years into this bull market runs with valuations that are above their 5 and 10-year averages, doesn't mean the markets can't or won't move higher. We just have to be a lot more selective to find those pockets of growth opportunities. And we're starting to see signs of changes in market leadership beyond information technology. Value is now outperforming growth. International is outperforming U.S. I don't know how long those rotations last, but it does serve as a reminder to investors of the benefits of diversification and not loading up just into one area of the market.
Okay, so Kristina, well, China. Talk to me about China and some markets outside the U.S. I know there's a lot of preference out there for U.S., but Europe has actually done okay over the last several weeks, beginning of 2025. Should investors look there? Should investors look at China, where really the demographic story and the consumer economy story seem to have turned against it?
So I think all of the above. Investors should be looking outside the U.S. in places like Europe, in places like the U.K., in places like China, because what we're talking about is an outlook of about 12 to 18 months. And so, yes, you can worry longer term about things like demographics, but the reality is right now, these markets have a very supportive economic backdrop. We have the potential for in the European Union very significant rate cuts from the ECB. I think we'll also get more rate cuts than are priced in from the Bank of England. We have an accommodative environment, a supportive environment in China, primarily fiscal stimulus that's quite significant. But we also have a lot of the recent technological innovations. For example, DeepSeek is a perfect example that I think is a catalyst for a re-rating of Chinese equities in general, at least Chinese tech equities. So I think there's a lot of opportunity outside the U.S., and chances are most investors are underweight those areas.
I guess we'll see if she means it about, you know, allowing more flowers to bloom entrepreneur-wise there, too. So, Kevin, back sort of closer to home in overtime, Cleveland Cliffs, Diamondback Energy. Are those interesting places? What are you watching in those results?
Cleveland Cliffs, I want to hear from their CEO. Is he as optimistic as he was that there was going to rebound in steel demand during the first half of the year? And what's his overall outlook for 2025? Cleveland Cliffs has had a tough go of it over the last year, but they're off to a good start this year. So I'm going to really be looking into their forward-looking guidance. On the other hand, Diamondback Energy, they got a good yield, 5.3% trailing 12-month yield, trading at just 9 times current earnings. That seems good on the surface. But oil and gas distribution in this current environment, not knowing the supply-demand balance for the balance of this year, I don't know if that's a name I'm going to look to pile into. Cleveland Cliffs, I'm going to wait to hear what their CEO says, but I still think there are many other opportunities outside of those areas on U.S. shores that are going to provide growth opportunities in the new year. And I think on Wednesday afternoon, we're going to be reminded that the AI revolution isn't dead just yet, and CapEx spending into AI is going to only intensify.